Hey, good afternoon and happy Friday, everybody. This is Sam Allen at Grounded Real Estate here to give you your monthly market update for September. We recently got last month's numbers in, so let's go ahead and take a look at where we stand. Alrighty, so sorry for the large amount of numbers here. This is the last 20 years of median price that we track. Keep your focus down here. Our median price is $425,000 for the Sacramento region, which is up slightly over the last couple of months here. But I think more importantly, looking at that little blue number below it, 10.4%, that represents our growth year over year. So last August, we were at $385,000. So 10.4%, that's a really significant jump. We haven't had double-digit jumps like that for a while, really since we were coming out of the Great Recession. You can kind of see here, we've had a nice steady climb. We do get these really seasonal blips. What happened here is we had that COVID sort of shutdown for a while, in March, April, May, and then we really had a nice spike up because all that demand didn't go away just because COVID was here. And we're really seeing that right now. July was our busiest month. We sold 20 homes in July, and that trend is continuing to show itself, although we are getting back into seasonality heading into late September, October here. What's driving this? The Fed rate, interest rates are really driving this. And while the Fed rate and mortgage rates are not necessarily tied together, they do correlate. And so this, the Fed basically said they're dedicating to keeping rates at or near zero for the foreseeable future. So that really increases people's buying power, how much they can afford, the amount and what their payments look like. So that's a really important number to keep an eye on. Rates are really low. If you want to refi, this might be a good time. Let's see, what else? Bay Area interest. This handsome fella here is Jack Dorsey. He is the CEO of Square. I shared this slide a couple months ago, really talking about Bay Area buyers moving here and what it could mean when other people followed suit, like Facebook and Google and Apple. They're allowing people to work from anywhere they want and saying, we don't want you to come back. We're not going to have you come back to the office. So it's really shown up in our business where a lot of Bay Area buyers are choosing Sacramento. It's a great spot. It's a grown-up city now. We've got a great downtown. We're close to Tahoe. They're still close enough to their friends and family in the Bay. We're just much more affordable. This article came out in the Bee the other day. This is on the front page of the Bee, actually. This younger couple, it talks about this couple moving up from San Jose, and they can basically buy a house in Fair Oaks for almost what they're paying for an apartment in San Jose. We're seeing that show up also in our business. We have a listing that we're actually closing in Fair Oaks. We listed it for $600,000. We ended up with multiple offers, and it went for 10% over our list price. The buyers ended up being, they both one worked at Google and one worked at Apple. So it was really interesting to see this come out, and it was like, wow, we're really seeing this. This is not just some fluke. So that's what's really driving the pricing. This is an interesting stat. I don't really know what its impact on the housing market is. This is from Ryan Lundquist's blog, SacramentoAppraisalBlog.com. If you're into the numbers, Ryan puts out great information pretty much weekly, if not more. So make sure you follow him. But I just thought this was interesting. We're over 2,000 square feet for the average size of a home in Sacramento that's selling right now. What could that mean? These Bay Area folks are wanting the larger homes. Also, its impact could be if you're a builder or a flipper, maybe this is your target market that you want to really look at. The larger homes are definitely selling better. Ryan also had an interesting stat about homes that had swimming pools and the number of homes that were selling and the increase. I think it went from like 15% to north of 20% of the homes selling have swimming pools. So also very desirable as everybody's trapped inside and working from home and maybe not going back to the office. So maybe you need a little bit more room for your office and you need a pool out back. Why not? Here's another big scary table to look at. But again, look at the bottom here, 0.8 months of inventory. We're getting below a month of inventory again. We have not seen that since May of 2013. when we were really coming out of the Great Recession. The things that are driving those numbers right now are different today than they were in 2013. But suffice it to say, people are just buying right now. There's just not enough homes out there. So we'll keep an eye on that inventory. That inventory number, when it goes down low like that, it really has a strong correlation to median price. So we'll keep an eye on that. Here's a more pleasing graphic of that. You can kind of see how inventory has changed in Sacramento. There's not really any light at the end of the tunnel for this either, as far as I can see. There's a couple large home developments being built up in Folsom, but you know, and maybe in Elk Grove, but those were planned out a long time ago. I used to work in land use planning, and those plans, I remember working on those plans, and those were done back in like 2003, so 3, 4, and 5. So we're talking 15 years plus to get a new master plan community like that to come to fruition. So I don't see a lot of things being built right now. So our inventory should remain really tight. Final thoughts. It's not the Bay Area buyers' faults, first and foremost. You know, we can point to them, oh, they're ruining everything. They're buying up all the homes. You know, you would be too if you had that type of an income and that option. You know, live in the Bay and deal with that traffic, or come up here and have a little bit more room to run around. You know, with them also comes 6-figure incomes that, you know, also have an impact on our local economies, our restaurants, our grocery stores, our mechanics, you know, everything, every mom and pop, our accountants, our professional services. So there is sort of a trickle down effect, if you will, that comes with that. Good, bad, ugly, I don't know. It is what it is. We didn't talk about multiple offers too much. We are getting a lot of multiple offers, but not everything is getting multiple offers. If things are a little bit funky, you know, buyers are still pretty sensitive to that. If they're too high, if pricing is too high, buyers are used to prices running up from the list price. So if you price it too high, buyers aren't gonna write an offer because they're expecting that it's gonna go up from there. So we're not really seeing buyers come in really low. So, you know, sellers, don't be too greedy. It is a great time to sell. You know, buyers have record buying power right now, but you can't shoot the moon right now and expect that you're going to sell it. That's just not happening. You still have to be sensible when it comes to it and market it correctly. A tough spot right now in the market, it's not too tough, but if I'm looking for a darker spot, it's multifamily properties that have tenants in them. You know, with the moratorium on evictions and everything right now statewide, investors are just a little bit wary of picking up a property that has tenants in it that they haven't had the opportunity to vet themselves yet. And so, you know, they're just, it makes them a little bit nervous to buy tenant occupied properties. We just put a 4-plex on the market. Luckily it was vacant. It sold in record time. We put a duplex on the market and it has tenants in it. It's still sitting there, you know, and duplexes are really desirable. It's just when you've got tenants in it, you can't sell it to a VA or FHA. There's just problems around that, or an owner occupant. And then investors don't really want it either because you're inheriting somebody that could be a potential problem. Probably isn't, you know, probably really isn't, but just investors are really wary of that right now. The market activity still is seasonal, as you saw in that graph. It still has those nice seasonal ups and downs. So, you know, hang in there, buyers. The last 6 months, probably the last 4 months, have been insane. Our busiest months ever over here at Grounded. We are seeing the slowdown coming into October, November. So hang in there. Don't get too overly ambitious. Just keep your money on the side. Wait until you find the house that works really well for you. Don't stretch too far, you know, and just hang in there. There will be more deals coming on the market. So not really, last but not least, not really a point, but a question more I wanted to pose to everybody. How might a vaccine or, you know, vast reopenings affect our market in a year or 6 months or whenever this is going to happen? I don't know. I'm just wondering, what will that impact be? And I'd love to hear your thoughts on that. That's all I've got. Thanks for hanging with me here through the market update. Stay in the loop with us. We're on all the social media and other platforms. So if you want to know more, follow us there. Call your favorite grounded agent. We'd love to discuss this more. We're going to attach this slideshow and some of the reports. So if you want to dig into the numbers more, go for it. We've been a little quiet on social media lately, just kind of sitting back and seeing what's going on, but we'll get back out there in front of you. So anyways, thank you guys. I hope everybody is happy and healthy and well. Take care. Have a great weekend and a great month, and I'll see you next time. Bye.